Well, hey there, everyone, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from another beautiful day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a focus on seasonality, including what is seasonality and how did this all begin for stocks? He's also going to share the different types of seasonality, why seasonality is the king of the big picture, and three ways to use seasonality in your trading. And hopefully, we're going to find and share some live examples of seasonality during today's VIP session. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone and we do have some ground rules. Remember, be kind, keep to the topic, no political discussions at all. And guys, no side conversations, and let's focus on the education and information that Roger's sharing because he's here to give you an edge and to help us all become more confident and consistent in our trading activities. Now, in this morning's pre-market open show, Roger shared that the catalyst for today would be the Fed, since they had a PPI report that was coming out, and we knew that there was going to be a 10-year bond auction later in the afternoon. He also suggested that we need to keep an eye on tech, since Oracle was up 30% and SNPS was down 30%, both in the tech sector. On chips, NVIDIA, Avgo, and AMD were all up between 4 and 9%. And for crude oil, we have an inventory report that was scheduled to come out this morning as well. So those were the key catalysts. And you know what a catalyst is, right? All right, that's information that we know that hasn't been yet priced into the market that has the potential to be market moving. And those were the catalysts for today. Now, Roger also published his small cap watch list. And I'm going to go ahead and copy and paste this for everyone to see in the chat panel. Give me a second here. There you go. You can see the watch list in the chat panel. And once again, he was looking at GLE above 645, AEHL above 35.25, CAMP above 750, and CCTG above 510. Now, the other thing to remember about these small caps is that the key to Roger's selection process is extremely high volume and price action. Those are the things that he's focused on. Remember, small caps are kind of on an island by themselves. They're not impacted by the things that normally impact the markets because big money, hedge funds, institutions typically aren't putting any money in the small caps. And lastly, folks, only look to trade at these during the normal market hours, okay? And if you get to around 2 o'clock in the afternoon and your levels haven't been hit, don't worry about it. Forget about those stocks, move on to something else. Now, Roger also issued his daily stock watch list, and I'm going to publish that here for everyone to see as well. And there's a couple of things that I want to point out about this watch list that will be helpful to you, and Roger made a point of emphasizing them during the presentation. With regard to the shorts, you'll note that there are 4 stocks that have an asterisk: CMG, ACI, SFM, and BJRI. And the reason they're asterisks is because these are all food and restaurant stocks. And he said, remember, when you're looking at investing, maybe in more than one stock in a particular sector, be wary of correlation and maybe consider just putting a half size on if you're going to trade 2 of those particular stocks. The same on the longs. We can see that C and USB both have double asterisks. What that means is these are financial stocks. And if you want to invest in both of those, just put a half serving onto each one of them. No sense, once again, and pay attention to the importance of correlation. So those are some things that he definitely emphasized. Other things to consider is this, folks. On any of the stocks on the watch list, if you're considering a short or a long, be absolutely clear that these stocks are either breaking down or clearly breaking up before considering them as either a day trade or a swing trade. Roger also closed with the following comments that I thought that were pretty important. He said, on the one hand, there's a number of factors that are suggesting that the markets are poised to move higher. We had a solid PPI report. We have sector rotation that is favoring speculative stocks. The VIX remains pretty low within its range, and bonds were moving higher. These are all good signals as the potential for the market moving higher. But he said he also has concerns that the market may be topped out. In other words, this may be about as good as it gets. And why? The first thing and the key thing is that the things that are driving the markets are the MAG stocks. That's 7 stocks that are driving the gains. If you take them out of the equation, you can see that the broader market is just really consolidating and not doing much. He also shared 5 key things to keep your eyes on to see if the market may in fact move higher or if it's topped out and could move lower. What are those 5 things? Look at the QQE, the RSP, and the bonds, and watch them to see if they move higher above resistance levels or they move lower below support. Those are 3 things. The 4th thing was, will speculative sectors remain on top? They're on top right now. Are they going to stand there, or are defensive stocks going to start moving up? And the other thing he said you want to keep an eye on is, will the number of stocks above the 52-week average be at over 100? So those are 5 valuable things to keep an eye on to see if, in fact, the market has topped out or will move higher. Now, once again, today's agenda for the VIP room, the focus is going to be on seasonality. Roger's going to talk about what seasonality is and how it began for stocks. He's going to share the different types of seasonality that are out there, why seasonality is the king of the big picture, 3 ways to use seasonality to your trading, in your trading. And if we've got some time and if things present themselves well, we'll look at some live examples in the markets. And with that, let me say hi to everybody. Wow, we've got a great panel here. We've got Matt, we've got Roger, and we also have Kane. I tell you what, folks, we've got some pros in the house here. Gentlemen, it's great to see you. Welcome to the Noontime Show. Roger, question of the day. Any surprises at this point in time from when we got together earlier this morning?
Actually, absolutely not. Not even for a heartbeat of a second. Morning, everybody. I'll say hello to everybody in just a second. Let me just share my screen. My big concern this morning is that we were getting a little too uppity on the S&P and the MAGs. I was telling everybody how MAGs, and I'm not going to go through it because I went over it like 50 times this morning. But
yes, you did.
I did. I was very excited because it was very meaningful. You see where we're getting a little too uppity here. They're getting a little too high up here. And when that happens, we usually see a pullback. And you can see that we're a little too much too soon, especially when you're looking at RSP, and RSP is doing this. I mean, look at that. This is all, folks. The only difference here is the weighting. Look at this. Look at SPY, right? Look at this, all-time high, and look at RSP. And I just think something hit the VWAP. Yeah, it was Palantir. Okay, good. I'm watching some stocks. So, do you see this? Nothing. There's nothing here. So, and look at QQQE, and I mentioned this all this morning, like in great detail. Look at that. So there's just not much there. So this makes me very cautious because it tells me that most of the market cap is in the mega caps. Hey, Kane, good morning. I just seeing you here. How are you?
I'm doing great. How are you?
Good to see you here. Sorry about that. I honestly just did not see you. Good morning. Good morning, everybody. Good morning. Let me turn on YouTube too. So I feel like the market, I genuinely feel like the market right now needs a little cool off. And I'm not talking about a major cool off. I'm talking about just coming from here back down to here. Right. That's all I'm saying. See how it look, folks. Every time it comes up here, it goes down here. It comes up here, it comes down here. It comes down here, it comes down there. That's all I'm saying. I'm not suggesting it. I'm not looking for any like mysterious sell-off or anything like that. I just think that's, look, we went from the bottom of the channel. Literally, when I say the bottom, I mean look down to a tick. Look at that, Raleigh. Down to a tick. Down to a tick.
Incredible. Yep.
And now we're on the upper end of this channel. And I'm telling you, folks, the SPY does not like to deviate in September too much from the 8-day EMA. Seasonality, September, something we're going to be talking about a lot today. Let me say hello to everybody, and then we will begin. I got a lot to share with you. And if you wait all the way till the end, and when I say till the end, I mean till the end. When I say the end, not when you think it's the end, I'm going to share this with you. It's a seasonality cheat sheet that I've got, but I'm not going to show it to you now. I'm going to wait till the end of the day. So for those of you who are thinking about signing off early, no soup for you there. All right. Let me say hello to Scuba Chris. Hey, Scuba Chris, been a while. Ken, iPhone Ron, Catherine, Cyrus, Eduardo, Bugs, Ken, Stacy, Matt, Ivana, Hopium, David, Jill, CN Sling, Rabiat, good morning, Jim, Hopium, Cyrus, Ken, Scuba Chris, Jesse, Ron, Robert, Mary, Rock O'Neill, Mike Lai, Marina, Jeremiah, Stacy, Shannon, iPhone, Stacy, Marlo. Hey, Marlo. Ken, Linda, John, Gus, Cyrus, Becky, Wesley, Kathy, Claude, Peter. Hey, Peter. Good, good, good. Jeff, Scott, Angie, Jacques, Johan, Barry, Ken, Sweetchin, Peanut. Good to see everybody. Pam, Joel, Cliff. Good to see everybody. Don. And let me just, I have to go to YouTube. I haven't gotten to YouTube yet. But let me just do that real quick. Say hello to everybody there, and we will begin. Because we do have a lot of things to talk about today. Bill, Kevin, Krish, Sifazio, Genevieve, Dave, Rick, Ali. Hey, Ali, Deanna, and Helen. Hello there, everybody. All right, folks. And I'm not kidding. I got about 75 emails regarding the winner we took on BE today and the Palantir. People were very, very happy. So, Raleigh, you were asking me about the things that I wasn't expecting. I wasn't expecting to take a huge winner on BE and Palantir this morning.
And there you go.
Some pleasant unexpected.
Yeah, it must be all that clean living.
Exactly. Okay, so I want to teach you about seasonality. But first, I want to give you a link to something that Kane is going to be hosting. Kane and I are going to be hosting something we've been working on behind the scenes. Ooh. This is, let me give you that link here. Matt, can you post this? Grab it from Zoom and put it on YouTube. There it is. Now, Kane, can you take maybe 10, 15 minutes and explain to us what you got? Just kind of give us a little deep insight of what we're going to be talking about this Saturday, Sunday, and then I'm going to go deep into seasonality.
Yeah. So one thing that we always want to do is just be aware of things that are changing in the markets. And something really big happened right around COVID time. And that was, number one, we got a flood of retail traders come in. And number two, the options market started slowly gaining a lot of ground on the stock market. So the volume of shares that are being controlled by options is now about 40% of the entire daily volume, which is huge. It was nowhere near that before COVID. So what that means is that you've got this new force inside the markets that it's hard to ignore. You can't really just turn a blind eye to it anymore. The options market is now having a huge influence on the stock markets. And there has to be a way for us to see that information and see that influence, because you can't really see it on a normal chart. Like we're looking at Roger's screen here, we're looking at price action. That's still super important. You're never going to get away from the basics and the fundamentals. What I'm saying is that there is a new basic and a new fundamental that is hit the market that wasn't there in the past. And we want to be aware of that. So you can't visualize it on a price action chart or a price chart like this because it's all in the options market, and you don't get options data on a price chart like we're seeing right here. So we do have to be able to go in and scrape a whole bunch of data, basically an entire option chain of every single ticker and every single expiration date, and compile and be able to go through all that data, be able to analyze it. And what it does is it shows you where the market maker has exposure, or in other words, risk. So you may hear me or Roger talk about what I call liquidity pockets, basically areas of supply and demand. And markets will move from areas of liquidity to liquidity. So anytime you see a market pause, sort of like on Palantir right here, you saw it chop sideways until the last 2 days where it kind of broke out. Well, that was an area of liquidity. And right now it's moving up and it doesn't look like it's going to stop. Well, it's not going to stop until it hits another area of liquidity. So experienced traders like Roger can spot where those areas of liquidity are just on a price action chart. And that takes a while. It takes generally people several years to be able to pick that up. But what if you could see another way of seeing where those liquidity pockets will be? Well, I call those gamma pockets. And that is where the market maker now, unlike 5 or 10 or 20 years ago, the market maker now is adding their liquidity to the markets in a major way. In a way that, of course, they always done it, but now their volume is so big that it actually pushes the underlying up and down through areas of low liquidity to areas of high liquidity. And we can see where the market maker is going to be pushing these prices simply because they have to hedge themselves. So where do they have risk and how do they hedge away that risk? And during their hedging activities, if they represent a large number of shares inside of the market, then they're going to be pushing that underlying up and down. So we've got some really cool software that shows us exactly that. And Roger and I are going to be showcasing that this weekend. I'm super excited about it.
Ah, perfect. I appreciate you. So, folks, this is going to be really cool. I know a lot of you guys love software. Software is very cool, and a lot of you guys like it because then you can kind of scan your own trades and find your own setups and do all those things, which is very much encouraged. So here's the link. Let me post that link again. And Matt, please post it on YouTube, okay? Yes, I actually said it right, YouTube. I confuse Slack, Zoom, YouTube, Skype, Telegram. I confuse them all. I really do, because I'm on all of them. And I'm like, Telegram, Skype, Zoom, X, Twitter. I don't even know where the hell I am these days. Okay. Thank you for that. I appreciate that, folks. And I'll remind you again before Saturday, but Kane and I are going to be doing a special presentation. I'm taking the weekend off to do this with him. It's going to be fantastic. Kane, it's going to be Kane software. It's Kane software. Kane's been working on this, but the idea behind it is just amazing. Thank you, Ken. Thanks, very, very, very nice of you.
Thank you, Ken.
So it's going to be Kane software. It's his baby. It's his idea. He's a big gamma guy. You know, folks, I could spot these levels pretty easily on my chart. But again, I've been doing this for 30 years, and I have some advantages to the average guy. Maybe. I don't think I do, but people have told me that I do. So I'm just going to go with that. All right. So I want to now talk about seasonality, and I want to talk about seasonality from a perspective that a lot of you folks are not using it, okay? And you should be using it, like really, really using it. So let me just pull up my TC2000. And by the way, don't go anywhere. Don't you think about going anywhere, because as I said, not only am I going to give you, I'm going to give you a lot of red meat in the next hour and a half, like a lot of red meat. And then I'm going to give you something that I had Matt spend 3 hours making this morning, and I'm going to give it to you, and it's actually good for the next 2 weeks. I'm not even going to make it part of the webinar. I'm going to reward anyone who came here before the webinar, okay? So this is a big surprise that I have for everybody. But you got to hang out, and you got to be patient, and you got to wait till we're done with this, okay? It's really, you did a great job on this, Matt. It really illustrates how important seasonality is. So you guys will see it in a little bit. I'll give it to you guys. Actually, I'm not going to give it to you. I'll just show it to you in a little bit, and we'll go over it. But pay attention. So, what is seasonality? How did seasonality start? Where did all this stuff come from? Well, seasonality originated from the commodities, and not only commodities as they relate to stocks. When I want to say commodities, let me be a little more. Let me back up a little bit. And folks, this is very important. This applies to day trading. This applies to swing trading. This applies to every kind of trading you want to do, and any kind of trading you want to do. This is not this is not like something for long-term investors. I use this day in and day out all the time. Okay, all the time. So now think about this, and again, we're going to talk about real common sense here. Okay, think about seasons of the year. Would you all agree with me? And I think just about everybody here, unless you have an indoor swimming pool, I think everybody here would agree with me that people buy pool supplies, swimming pool supplies, not during Christmas or January or February. They buy pool supplies during, May, depending on where you live. I mean, if you live in Florida, probably March, but for the most part, around, May, June, where the summer starts, right? Similarly, there's always hurricanes. There's a hurricane season, right? Well, wouldn't you assume that season it impacts orange juice, cotton? Yes, cotton. By the way, a lot of cotton grows in Texas. Raleigh knows that.
Yes.
But now think about this for a minute. We're not talking about commodities because guess what? There are companies, S&P 500 companies that make orange juice. How about S&P 500 companies that deal in clothing or deal in cotton swabs or cotton balls? Now, or how about pool companies that use chlorine? Or how about companies that sell fertilizer right before before planting season starts? Do you see where I'm going with this? You can't get away from it. And if you try to get away from it, you're giving up a major edge that you don't have to give up. So what I just showed you, I just gave you, I don't know, a handful of examples that are really good examples, like great examples of how seasonality impacts not just commodities, but how these commodities impact our daily lives and how our daily behavior based on simple things like weather it's become part of our rhythm, the rhythm, and it's a big rhythm. Have you noticed certain stores, they'll start having at the end of summer, they'll start having big sales on summer items, and all of a sudden you see furs there, and you're like, it's October, and you all know exactly what I'm talking about. Okay, one of the beauties of this of the members that we have in this program that you guys are here is we have a lot of folks who've been through stuff, a lot of folks who are not teenagers. Basically, this is for mostly adults and people who've been around the block. And if you've been around the block, then you know that everything I'm saying is pretty, the way life is. Now, don't think it's just seasons and weather. It doesn't work that way. And let me explain. And I've explained this before, and people have found this pretty fascinating, okay? So you remember the old days when we used to put money, do you remember before the internet, back in the 90s, we all used to work for companies. They used to come around, the administrator department used to come around once a week. They used to give us a little card. We would tell them what stock we'd want to buy and sell, how many shares, and they would be like, okay, we'll give you your price next week or whatever. And everybody would be like, yeah, whenever. We don't care. Nobody was day trading back then. There was no internet. This is when the Dow was just kind of like doing nothing pretty much. So that's when that happened in the 90s and 2000s. A lot of institutions, money started coming into money management firms. Before that, it was individuals and mutual funds. 401ks started getting really prevalent. If you look at the growth of 401ks and all of these things, you'll see it started right around the time internet started. Okay, that's when the stock market really took over commodities. Okay, before that, people traded commodities and invested in stocks. Everything changed after the internet. So right before the internet, people were still kind of just the 401ks. And trust me, this has everything to do with day trading and swing trading. This is I'm not some boring investor, okay? So what happened was these institutions, they buy on and sell on a cycle. They buy and sell on a cycle. So what once might have started or began as a result of weather or whatnot has just begun to happen on an economic cycle. Also, federal data that moves the market. All of these things have played into the rhythm. So seasonality isn't just something that impacts a few stocks and there's nothing else to it. It doesn't work that way. The whole market is driven grossly by it, including, hey, we're in September, guys. If we were right now at the end of October, and the stock market was where it is right now, I would say, you know what, we're in a pretty bullish cycle. Let's maybe have a little bit of position here. But hey, we're in September. Not only we're in September, we're in the first part of September. We've got a lot more September to come. Maybe we should just chill. Notice I'm not taking any shorts. I'm becoming more. It's impacting my binoculars that I look at the stock market through. Okay. So there's a huge advantage to having that in your pocket. Again, to give you a good analogy, it's like a sailboat and tailwind, right? Do you want to go out on the ocean in a beautiful sailboat without any wind that day? You're not going to get it very far. It's the same thing with seasonality, and these things are really important. So now. So I've explained to you the reason I think one of the biggest reasons why I think seasonality works so well is because these institutions have habits, and they've included these habits into their trading. And people, what's the word? What's a good politically correct word for it? People take the path of least resistance. Okay, people take the path of least resistance, which means if there's no need to change something, nobody's going to change something.
Right.
And there's really no need to change. If something works, and if there's no complaints, and if the CFTC or NFA or what is it called? SEC isn't knocking on your door. What do you need to change for? You get paid for doing something without having to make any changes. You're just going to keep doing it. So that's kind of what I wanted to say. Now, there are three ways we use seasonality. Three ways we use seasonality. Can anybody answer that question for me? Me, in our trades, in my programs. Three ways that I use. I'm going to test you on this. No, I'm just kidding. But there's three ways we use seasonality. Can you tell me? Does anybody want to answer? Boy, don't all rush at the same time. Like, let's see if YouTube has anything. Don't folks, I'm telling you right now, it may not seem sexy, but I use this thing in almost all of my trades. It's really, really important stuff. Really, really important stuff. Okay, here we go. We got data miner. Well, yeah, a little more specific. No, I don't use volume. I don't use it for volume. I use it for confirmation. I use it for price volume. I don't use it for price volume. No, there's no volumes. Okay, all right. So let me tell you the three ways I use it, okay? Okay, Naples fan. Now we're getting somewhere. Sector watch. All right. See, this is really important, folks. You'll see why it's really important in a minute. I'm going to show you something pretty eye-opening, okay? So that's okay. It's not a big deal. You know, we're not in school. I mean, we're just having fun here. So let me let me try to answer your questions, okay? I mean, let me continue this so I can answer your question. But somebody had it good. Sector. So I'll give you some ideas, okay? So number one, we use it for the big picture. The big picture. In other words, we're in September. Are we in the first week of September? What does the sector look like? The big picture. In other words, we look at it for, as someone just said, for the big picture, for the sectors. It's true. Sector or for the overall market. So we use it for sector or overall market. Okay? In other words, is this a typically over the last 40 years, how many times this week in September are the markets going down? What sector's going down? Notice I'm not talking about any specific stock. I'm just being what's the key? What's the word? Throwing a wide net here. I'm throwing a wide net, okay? So, yeah, I'm just saying, hey, and remember, folks, and here's the thing. I only use X amount of things. You know, I use relative strength, I use seasonality, I use very specific things. I probably use maybe 5 to 10 things. But I've been using those things for many, many decades now. And there's a reason I keep using it. And when I keep telling you context is really important, and let's say I find a stock and I really like it a lot, but 4 other stocks in that sector and the industry, let's say healthcare for shits and giggles. Let's just say healthcare. Let's just say that it doesn't want to go up. It's going down, and I find the best healthcare stocks. I'll probably pass it by. Maybe I'm being superstitious, maybe not. But if I'm seeing the entire sector 80% down out of the last 40 years, do I want to take that chance? That clearly doesn't put tailwind in my back. And do you know how often that saves my butt? 70, 80% of the time. Okay? 70 to 80% of the time, as you will see in just a few minutes. Examples. I'm going to show you real red meat. So the first thing is I use it to negate ideas. And I use it to back up ideas. In other words, hey, do you guys want to go sailing this weekend? Hey, the weather's supposed to be beautiful. But let's look at the wind for the last 40 years. What's the wind say? Yeah, 80%, it's good. Let's definitely do it. Versus, you know what? It's bad, 80%. Do you want to take that chance? Let's just skip it. That's what I'm talking about. It's not a maker or a breaker, but hey, it's a good start. You know, I'll give you a good analogy. You know, I always use those men picking up women and women picking up men analogy. Mm-hmm. I'll give you a great one. Imagine there's this one bar you love to go to, but every time you meet a girl at that bar, and again, I'm making all this up, folks. There's no hidden meanings here. She's just a nut job, okay? You have a great time, but you're looking for a serious relationship, and every time you go to that bar, every time you meet someone, you love them, but it never works out. You're probably not going to go there to meet your next bride. Again, I'm not trying to. Please do not. Or if you're a woman, then going to meet men. You get the idea. That we're just, we're all having fun here. So it's really, really, really important to use that. And if you think I'm overselling it, I'm not. And if you come to my morning show, you will see very frequently me saying, hey, we're in a reasonable good month, we're in a neutral month, this period is not really good for cars, or hey, it's or if we're around Thanksgiving, not Thanksgiving, excuse me, or actually no, if we're around Thanksgiving and I see that, like a month before Thanksgiving, and I'm seeing things that people buy around Thanksgiving, like consumer staples go up, it's not a big surprise. I will look for that. So do you guys understand? Really, really important. And if you think that that this is some voodoo or some secret sauce, it's not. And as I explained to you, a lot of it happens simply because Wall Street got into a pattern and they haven't had a need to change it, because all this happens over years and their job is not to move liquidity. Remember, we're talking about deep institutional money, not even hedge funds who are there to outperform. We're talking about your pension funds, where they're not trying to outperform the market. They're just trying to keep liquidity. Think about how much money is in pension funds. Those algos have not been changed for decades. For decades. Okay. So don't be a turkey in November. You get what I mean. But actually, the example I wanted to tell you was not Thanksgiving. It was a different example. It was something. Chocolates for Valentine's Day. You know, like I'm always looking at Hershey's. I'm always looking at Hershey's before, like a month before Valentine's Day, and there is some seasonality there. Or chip stocks. Chip stocks love Valentine's period. I don't know why chip stocks love Valentine's, but they do. They do. They get very bullish around that period of the year. Yeah, I don't know what it is, Scuba Chris, but you got a lot of you guys who've been following me know exactly what I'm talking about. So again, just we. Yeah. So review. First way they use seasonality for big picture tailwind. Okay. Second way we use seasonality. Second way we use seasonality is for windows. Now we're going to talk a lot about this in about 15, 20 minutes, but let me kind of give you the little warm up for it. Okay. These wealth windows, they're 5 or 10-day period, basically 1 week or 2 week period where I'm looking for specific stocks to really, really move, like really, really move, like move a lot. Okay. Like move a lot. So so in other words, now we're getting into the micro view. Now we're getting into the specific picture. Now we're getting into the bigger picture. Okay. Now we're getting into, the micro picture. Now we like the bar, we like the girl. Now we're going to go and talk to her. 5-day, 10-day holds. And I created this specifically because when I look at seasonality, I'm not big on seasonality for if this does that and if this does that. I just want to see raw score. Like, how does it do during this time of year? From if you bought it at the opening this time of the day or closing on this day and then closed it 5 days later at this period, or do something like that on a 10-day period. That's what I'm looking for. And I found that to be very, very useful. And it was so useful that we created a program called Data Miner for it, which is not what we're here to do today. But to give you some ideas, to give you some really good ideas of it, I wanted to show you. I had Matt specifically make this for our class today, and I hope you guys are appreciative. He literally made this for me this morning, and I wanted him to do it because this exemplifies exactly what I was talking about. Okay? So if you guys like data, hard data, now look at this, for example, okay? Take a look at this. If you don't think seasonality is something, take a look at this. This is the seasonality for the next it's a 10-day, right, Matt? Yeah. 10 market day. Yeah. This is seasonality for the next, this is actionable. This is real. This is not some hypothetical. I had Matt make this for me. Now, let me go over this with you, okay? So this is going back to whenever the stock started trading, or 1990. This is the profit factor. This is the number of years we took into account. So you could see the number of trades equals number of years. And you could see the amazing win rate. And I'm being really sarcastic right now. So this is basic materials. You guys could see my screen, right?
Yeah, absolutely.
Yeah,
Okay, cool.
I can see it. Yeah.
Okay, cool. Thanks. Hey, Ellen, you came in at a good time. So now this is red meat. This is actionable. This is real. This is not some hypothetical crap. Make it bigger. I could make it bigger. There we go. All right, I made it bigger. Okay. All right. I don't want to hear any disharmony. All right. No disharmony. So look at XLB. This is the basic materials sector, okay? These are three pretty big stocks. These are all, from my recollection, S&P 500 stocks. Look at the 10-day hold on these. Look at the 10-day hold on this. Look at how amazing the profit factor and the win rate is. Do you see this? So let me ask you guys, would you trade basic materials for the next two weeks based on this? Let's see if we can get some answers. Oh, Jeanette. Jeanette wants to trade it, huh? I see. I see. Mike Cly wants to trade it too.
But there's a pretty clear consensus here.
Yeah. Guys, you lose a lot of money if you take longs in this. Your win rate is 27%. And your profit factor, you lose 68 cents every time you do a trade. This is bad numbers. Yeah. This is bad numbers. You don't want to take any of these. I trick you. See, I like to trick you guys sometimes.
Yeah. And Hopium said not based on just that. Well, that's kind of what Roger was talking about earlier, is like you want to look at the overall environment also. So if you have an outlier that looks like it's going to be good, but you see all the entire sector and all the top stocks in the sector performing really poorly, that was Roger's analogy with the bar, right? You probably still don't want to.
Exactly. 1 second. I just need to put on a trade in 1 second. 1 second.
While Roger's doing that, I'll give you a little bit of insight on funds and how they operate. In seasonality, it works all the way down to daily or even hourly. So for example, why is there a huge volume at the open? Why is there a huge volume at the close? Do people just because they're desperate to get things done before the close? They couldn't do it in the 3 hours or 4 hours or 5 hours before the market closed? And the answer is no. It's the way that the funds operate. So if I'm a fund manager, I don't know necessarily if cash is being added to my accounts during the day. And so in the last hour of the day, my team, my assistants are compiling all that cash that has come in that now needs to be invested. And I only have an hour left to get it done. So I'm going to be rushing to do that. And the same thing happens overnight. Overnight, a lot of people put in their orders, or they decide to take money out, they decide to add money in. And so in that first hour, I'm scrambling to get that cash invested or free up that cash just in case there's dispersals. So there's seasonality will work starting from hourly all the way up to several years sometimes.
Wow.
Exactly. Absolutely. So let's go through this, guys. The win rate on XLB over the next 10 days, and this is real. This is real. Over the next 10 days. This is not some hypothetical. Matt made this for me this morning. Like, I got it like 5 minutes before coming in here. You would lose in the last 18 years. You would only win 27% of the time. How about financials? Do you guys like financials right now? Well, if you go long financials, the win rate in the last 18 years is 33%. It's crap. It's garbage. Caca. How about consumer stocks over the next 2 weeks? A nice 38%. I wouldn't do that. How about healthcare? 22%. Yes, they're all garbage, Michael. That's why I wanted to show you. You thought I was showing you some good stuff. Now, you may want to short these depending on the technical action and all that other stuff, but I wanted to show you this to explain to you the power of seasonality.
You know, there's another way to look at it, this too, is that if you were looking to absolutely trade and go long on any of these and you didn't have this information, yeah, well, you would be in bad shape.
So my question to you is, your favorite guru starts telling you that in the next 2 weeks, he loves the seasonality stock. And it's a basic material stock. After looking at this, would you buy basic materials for the next 2 weeks?
Mm-mm. No.
Your favorite guru, your favorite guru tells you the next 2 weeks that there's a great financial stock out there, and it looks absolutely beautiful. Beautiful. Would you buy financial stocks in the next 2 weeks? What about consumer discretionary or healthcare? Now, let me ask you guys a question. And first, let me make a statement. Remember, I said some of the most important things is what not to do. Remember, what not to do could be just as important or more important as what to do. So, don't you think I'm going to take this into account in my analysis over the next 2 weeks? Now, by the way, this is real. This isn't something we made up that we show you every time we do a class over the years. This is the first. I got this literally here. He sent it to me. Let's see. 11:50, 10 minutes before we came on here. 10 minutes before we came up here. Well, we use a program called Data Miner. But a lot of you don't know this. A lot of you really, really don't know this, but let me just show you something here. Why is life so difficult today?
Yeah, Michael, I think we're going over the same point over and over again. Yes, not all stocks in the sector are going to necessarily be crap. There could be one good stock, but is it easy to find that needle in the haystack, or is it easy to find that good stock in a whole pile of good stocks? So
I'm not trying to be a hero. Yeah, I'm exactly what Kane says. I'm not trying to be a hero, Michael. I'm not trying to be a hero. I'm just trying to avoid. I'm trying to avoid as much stuff as I can. That's what I'm trying to do here. I'm trying to avoid as much. I'm trying to. Yeah, Michael, there could be a good one, and all of this could be wrong. And everything that you read on TV could be wrong too. And yes, you're right. You're absolutely right, Michael. But you know what? Usually it's not. Usually it is what it is. And if you're one of those guys that's looking for that hidden something, good luck to you, because in my 50, almost next month I'll be 55. In my 55 years, I usually find that things are just the way they are. All right, so folks, Cyrus, if those stocks happen to look good technically, I would also sell them. Oh, something else I forgot to explain to you. I forgot to tell you the third most important way to utilize seasonality. So you're going to have to wait till I'm done with this webinar. Now, here's the good news. I've got some really good news for you. Throughout this class right now, I'm going to give you at least 30 to 40 seasonality windows. Guess what? Those seasonality windows work beautifully. You know why? Because they're based on real seasonality dates. So not only that, I'm going to show you the coolest way to use seasonality. You guys are going to love this. I've never shown this to anybody, but you're going to have to wait till the end. So I gave you 2 ways to use seasonality. I showed you how to use seasonality for the big picture. I showed you how to use seasonality for the little picture. I gave you, how many sectors and stocks did I give you? I gave you 4 sectors and 12 stocks that have shitty seasonality for the next 2 weeks. Now I'm going to give you 40 more seasonality windows on random stocks that are not specific, stocks that you guys really want to know the seasonality on. Trust me. Then when I'm done with this presentation in about 20 minutes, half an hour, I'm going to show you, I'm going to go back to my deck, to my numbers, and I'm going to show you the coolest way that you guys could start using seasonality that you guys have never even thought of in a million years. How about that? All right?
That's great. And I think, Roger, we need to let the YouTube people know that now is a great time to come into the Zoom room.
Yes, and if you guys don't move into the Zoom room, then you guys will miss out on some really good. I'm going to give about 40 seasonality windows right now. These are real seasonality windows on your favorite stocks. And in the end, I'm going to show you that graph again, and I'm going to show you how you can make money using seasonality in a way you've never, ever, ever thought of. So you guys are in for a big, big treat, but you got to pay attention. And again, I'm going to give you red meat right now. So don't go anywhere. This is red. We call it